Okay, so hey, I'm going to get started now. So first thing, just wanted to thank you so much for coming to our webinar. I know everybody's busy and I appreciate you taking time out of your day to join us. So quick intro on myself. My name is Reggie Green. I'm co-owner of Green Home Loans. I have been in the mortgage industry since 2004. It's basically the only thing I've done in my adult life after college outside of a brief stint at Enterprise Rent-A-Car. So, first part of my career, I was a top producing refinance mortgage banker. Around 2017, I decided to change the focus of my business to more referral relationships and focused on purchase business. Built a really large purchase team called Team Green, ran a branch in retail. In around 2002, rates went up March and April, and the whole market changed basically overnight. And we found that we weren't on the platform that we wanted everything we wanted as a loan officer. So in March of 2023, we decided to open up our own brokerage and call Green Home Loans so we could build a platform that we would want to work under as a loan officer. So long story short, our goal at Green Home Loans is to give you every tool in the toolbox to be able to grow your business, close more loans, keep more commission, and scale faster in 2026 and beyond. So that's what we are about in a nutshell. So a little bit more about who we are, okay? We have me here in this picture. We have Kaylee Taylor. She's our awesome business development manager. She helps all of our loan officers with anything biz dev, marketing, referral partnerships, things like that. Nick's our co-owner, and he is also my cousin. He helps a ton with compliance, back-end deal structure. So we really focus on helping you any way we can. Now, with us, we're big on you having the availability to have the best pricing on the market. So with Green Home Loans, you're going to have options to get the best pricing, wholesale pricing on the market, but we also have a ton of support around your business similar to a retail company. And one of the things from talking to brokers across the country is they feel like they're on an island. They don't have any support, they don't have any culture. And what we try to do is really meld these where you get the best parts of being a broker, but also that support around your business. And as someone that built a $230 million purchase team, like I needed support. So if you're doing 3 to 5 loans a month or whatever it may be, I guarantee you need support around your business, and we provide that for you at a high level. Now you have the ability at Green Home Loans to go correspondent, which means you can bank your loans or you can broker your loans. And we're going to go over that a little bit more in detail here in a little bit, but it really gives you the flexibility to win deals and control your rate pricing and comp at the highest level. Now, a Green Home Loans loan officer, you can be a self-producing loan officer. We are a great platform for that. We have a ton of resources to build your referral partnership business, but we're also great if you're a consumer direct loan officer. Maybe you want to buy your own leads. You need to take the leads. You need to put them in a CRM. You need to create text and email drips. We can help you with all that stuff regardless of how you control your business and how you focus your business on leads or referral partnerships. And like I said, at the end of the day, we're designed to help you fund as many loans as possible, make as much money as you want to make uncapped, and really allow you to try to build the lifestyle that you want to live. And one of the things I think is super important that's a little bit different about us is a lot of times when you see broker companies opening, you have the top producer as the owner of the company. And then they bring on loan officers, but the loan officers are just kind of like a side thought as maybe some extra income, and their focus is their own personal business, which is totally fine. But I will let you know that our focus here is building the best platform and supporting our loan officers. It's not on doing our own personal business. Okay, so our focus is on you and building the best platform we possibly can for you to succeed. Now, one of the things we've noticed over the past few years, especially since rates have gone up and home affordability, let's be honest, is very tight, is the mortgage landscape is changing, and broker percentage of overall market share is going up and up every single year. I think it's over 30% right now. And I really want to go back in time, depending, it doesn't really matter how long you've been in this mortgage business, but before 2009, the vast majority of loan officers were mortgage brokers. Then you had Frank Dodd came out and all these new regulations, and that was kind of the rise of your independent mortgage bank, which kind of took over there as a very high percentage of the business. But if we look at the mortgage landscape right now, you have clients that are able to easily shop rates and shop competition. If you're at an independent mortgage bank, typically what we see from talking to loan officers across the country is your initial rate stack that you see is not very competitive. Like if you're competing with a Green Home Loans loan officer and they want to beat your rate, they're going to be able to beat your rate and cost every single time. Okay, commission caps. And this absolutely drives me crazy when I talk to loan officers that are okay with this. I talk to loan officers all the time and they have a commission cap of $6,000, $8,000, or $10,000. And what's happening here is you're leaving so much money on the table, it's crazy. We've had multiple loans this year that have made over $25,000 in commission to a loan officer. So imagine if you had a commission cap of $8,000 and you made $25,000 in commission. You're leaving $17,000 on the table. And I know retail mortgage banks like to preface this that you're getting better rate pricing at a certain loan amount. But if we're being honest here, and I've run a P&L, commission caps are made to make the company more money, not to make you more competitive. Sorry to tell you, but it's the truth. I've ran a P&L. I know the back end. Commission caps you're not going to have at Green Home Loans. Okay, and self-gen loan officers, they just need more flexibility. As a broker, you're going to have every product. You have a ton of different lenders competing for your business. You control your rate pricing, you control your comp. It's just a much easier platform where you have total control with our help to help guide you if you need it. So to me, like if you're deciding to make a change this year, I think the platform that you choose is really going to kind of push the direction of where your income and where your business is going to be able to grow. Okay, now I want to go over a couple of these things, brokers versus retail or independent mortgage bank. Some of these we've already discussed, but wanted to go over what it looks like at a retail bank versus Green Home Loans. Okay, number one, pricing flexibility. What we typically see when we're talking to mortgage lenders across the country is they have a pricing, maybe they price up a loan in Optimal Blue, and that's their pricing. And if they need to go below that, they either have these buckets that are set up where they make less comp, a lot of times like half the comp, or they have to beg for a pricing exception, all this red tape. Okay, if you're a broker at Green Home Loans, like you control your pricing in real time. Like if you're talking to a client and you're competing on a deal, you have the ability to control that and win the deal in real time, not be begging managers and doing all this stuff. So you have complete control, and we're going to teach you how to control your pricing so you can win these deals in real time. Okay, most retail lenders, the vast majority, like 95% of their deals go to their lender. And then some retail lenders allow you to broker specialty niche products, maybe your DSCR, your bank statement, stuff like that. But when you broker those loans, it's such a pain in the butt that a lot of retail loan officers think that's how brokers work. And the reality is the reason it's such a pain in the butt is brokering is hard if you're not set up as a broker. And we are set up as a broker. Okay, so you have one option and then maybe you can broker these and it's a nightmare when you're brokering them. With us, we have 50, it's actually over 60 plus lenders, and all our lenders are going to cover every possible thing you need. Hard money, down payment assistance, jumbo, no income, 1099, P&L, commercial, like any possible thing you can think of, we have on the broker side. Now, there are 200 wholesale lenders on the market. The only reason we don't have all 200 is there gets to be a point where it's just repetitive. And, we can always add lenders in about 24 hours if a new product or something we really need is at a lender that we're not signed up with. Okay, when you are a retail loan officer, typically you're working for a branch or an area manager, something along those lines, and the margin that retail manager and the corporate margin that's also built into your rate pricing, it's already fixed for you. You don't really have control over it. Where at Green Home Loans, like I've said a couple times, you really control the margin. It's very transparent. You know what the company's making, and it's just easier for you to control this and win deals. Compensation, we already discussed this. This is like drives me crazy, but commission is capped at, let's say, $8,000. So you do a $600,000 loan at 150 basis points comp, you're already having to give up money. It's crazy to me, when the conventional loan amount's $800,000. You're not going to have commission caps at Green Home Loans. And the other thing we've seen is retail used to have a ton of resources before March of 2022 to help people's business. Maybe they had good marketing, biz dev, all these things that they could offer loan officers. And we're seeing that's been eliminated a lot because honestly, they just don't have the money to provide that. And one of the things about Green Home Loans, not only do you get business development, but you get quick response times. Typically, when you request a marketing piece, whether you're doing a social media ad, whether you're writing a newsletter and you need an image, or whether you're doing an open house flyer, open house social media image, you're going to get that stuff back usually the same day, at the latest the next day, with little red tape and just going back and forth to get the marketing piece however you want it. Your real estate agents that you work with or referral partners can also go directly to our biz dev team and they can help them without going through you. So you don't have to do that, but that is an option. Okay, so what I wanted to do is go over correspondent and broker pricing just so you can see both. Now, if you've been a retail lender your whole life, sometimes this stuff gets confusing. And I'll tell you, it only takes a few reps and you're going to get it. You know, when we moved over to the broker side, 3 years ago, it was difficult for a week or two. And then once you get it, it clicks and it's not that hard. Okay, so if you get overwhelmed, we help you with this transition. But how our correspondent works is very simple. Okay, you're going to see raw pricing. And you have the ability to make whatever you want on a single deal and really control your pricing strategy depending on the rate that you and cost that you want to charge that client. And you're going to make whatever the company makes minus $6.95. Okay, so I'm going to share a different screen here and we're going to price correspondent. Oh, that's not what I meant to do here. Okay, so we're going to stop this share and we are going to share. Where are we here? Okay, so I'm going to go into Rocket Pro, which is who we're set up as correspondent right now. And I'm just going to price out a deal and show you how pricing works on correspondent. I already have a preset deal kind of in here for you to look at. So here is the pricing scenario. It's an 800 credit score borrower, and long story short, they're buying a house, $400,000 purchase price, $300,000 loan amount, 75% loan to value, not home ready, just a regular conventional loan. Okay, so when we're pricing this, how it works is you're going to see raw pricing. Okay, so if we go down here to 30-year fixed, Fannie Mae, here's the pricing on this loan, okay? Now, just give you a couple examples to get your head around this, because like I said, it can take a couple reps if you've never done this before. Let's say you want to give your client a 6.25%. You're going to come over here. You're going to see there's a lender credit at this rate of 0.864, which equals $2,592. Okay, so if you decide to give that client that rate at 0 points, you're going to make 0.864 on that deal, which is $2,592. That's what the company makes. And then your comp is minus $695 on that. Okay, so obviously that's a very low comp deal. What you'd probably want to do is charge points. So let's just say in this particular situation, you decide to charge 1.5 points. Okay, you're going to charge 1.5 discount points. You're going to make 0.864 on the back. So you're making approximately 2.364% on this deal. That is the company compensation. You get that minus $695. So you can charge points when you see a lender credit. They're going to show as discount points. You can make the lender credit on the back, or you could give a portion back to the customer. Okay, so let's give this example. Let's say you wanted to give them a 30-year fix at 6.75. You wanted to offer this at 0 points, but you wanted to give them a 0.60 lender credit. So on this deal, you'd make 2% and you'd give them 0.6% lender credit towards costs and fees. Okay, so you have the ability to structure this however you want. Now, when you are going to a rate that has points, keep in mind this is raw pricing. So if you offer them a 5.99 at 0.2 points, you're not going to make any money on that deal. So you have to charge points above that, or the company's not making any money and you're not making any money. So maybe on a 5.99, you charge 2.2 points, 0.199 or 0.2 goes to get the rate, and then the 2% is yours. You get that compensation minus $695. Okay, so you're controlling your pricing. You can make as much as you want or as little as you want, as long as you're passing the high fees test, which usually are as long as you're staying under 2 points total on those deals. Okay, so total flexibility to make the pricing and the comp that you want on every single deal. Okay, it's just really a key when you're a lender to have this ability. Okay, now broker's a little bit different, and I want to make sure you understand broker. Okay, so how broker works is we have lenders set up at what we call different margins. It's called lender paid on the broker side if you're not familiar. So most of our lenders are set up at 250 basis points or 2.5%. And that means when you price those lenders, that margin is built into the loan. Okay, we have one lender at 225 and we have two lenders at 150 basis points. We have a few different lenders at different comps just so you have the ability to price different loans as lender paid with a few different price points. Okay, so I want to show you us pricing a deal. And if you look at this deal, this is a FHA deal, 30-year fix, $400,000 purchase price, 3.5% down, great credit. This is going to be what we call a lender paid deal, which means the margin is going to be built into the loan. So both in our LOS and you can also use Loan Sifter, you can price out all the lenders on the market and try to find the best fit for you on how you want to price this loan. Okay, now because we have a couple lenders at different price points, usually the lower price lenders are first. So if you look at this, you're going to see Power TPO and PennyMac, and you're going to see the total comp that the company makes at 1.5. So these are usually going to be the best priced lenders right now because they're lower comp, which means you're going to make less money. You don't have to use these, but every time you look at a borrower, you can decide how you want to price them. Okay, so for example, if I'm doing this FHA loan and I'm going to make 1.5% on it, this is built into the pricing, very different than correspondent. So if I give them a 5.875, this is going to be a 0-point loan. I'm going to give them a 4.434 lender credit, and then the compensation of the company is going to be 1.5% or $5,891. Okay, now if I want to make 2.5% on this deal, I just go down. You can see the comp on these. Now it's all 2.5. Rise TPO right now is the best price lender with us that has 2.5% comp. So if I give them 5.9, I'm going to make 2.5% or $9,819 for the company, and then I can give them a $440 lender credit. Okay, so you can price out your lenders and find the best price lender for your client. One thing I would recommend, specifically if you focus on purchase deals, is I don't personally go with the best price lender every time. Like if I'm working with realtors, I have to understand the loan process and set the right expectations, and I need to really feel confident in the loan process. So if I'm just pricing the best price lender every single time, I'm starting a process with a lender maybe I've never used before. I personally don't do that, especially if you're working on purchase business, because I have to know how this flow is going to go. So I usually have 2 to 3 lenders that I'm going to focus on, where I'm going to send the majority of my business to, my cookie cutter, FHA, conventional, jumbo, stuff like that. And then I'm going to have niche lenders that I could go to in certain situations. I don't recommend just pricing the best price lender and going with them. I just don't think that's a good thing, specifically if you're a referral-based loan officer, because you don't know the process with all these lenders. Totally up to you, but that's my personal suggestion. Now, real quick, on the broker side, and this is very confusing for people that have never been on the broker side, you also have the ability to do what we call borrower pay compensation. And what this means is every lender has the margin taken out of the loan. It's very similar to correspondent live pricing. So when you're looking at the pricing, there is nothing built into the loan. Okay, so when you go buyer paid as a broker, you have to charge what we call origination points. Whatever the origination points you charge, that's what you make. So if you charge 2, then the loan makes 2%. The cool thing about this is when you are going borrower paid and there's no margin in the loan, if I charge 2 points, you're going to start seeing lender credits at really low rates. So for example, let's say I wanted to offer this borrower a 5.99 and I wanted to charge 2 points. Well, I can charge 2 points, but there's a lender credit of 2.612. So in a sense, I'm charging 2 points, but I'm crediting them 2 points, and then I have 0.612 towards other costs in the loan. Or something maybe a little easier to look at. Let's say I'm doing a 30-year fixed 5.5 VA loan. I give them a 5.5. I charge 2 points. Well, you can't charge 2 points on a VA loan. I apologize. Let's say this is a bad example, but let's just say I charge 1. going really skinny on the deal, I'm charging 1 point, but I'm in a sense giving them a credit for 0.433. So in effect, I'm giving them a 0.6 point loan or 0.57 point loan. So this, like I said, this can get a little confusing if you've never done this before, but I promise you, we're here to help you. It takes you a few reps. Once you understand it, you're good to go. Long story short, if you take anything from this, you have the flexibility to price the loan however you need to do it to win the deal and get the customer in real time on Correspondent and Broker. Okay, a couple cool things here. So we actually partner with Rocket Pro. I know there's a lot of stuff in the industry, UWM, Rocket Pro. I don't pay attention to any of this noise. We're here to try to do loans. One thing I will tell you is the reason we don't partner with UWM is because UWM requires you to sign a non-compete clause, basically not using Rocket. I don't believe in that. I think it's un-American. I believe in competition. So the minute UWM pulls that away, we'll sign up with UWM. But if they have that, we're not going to sign up with them. We don't support suing brokers and stuff like that, which they actually do. Okay, so with Rocket Pro, the reason I want to go over Rocket Pro is you can use any lender you want at Green Home Loans. We're never going to force you or anything like that. But Rocket Pro does have a lot of businesses advantages that are important to brokers. That's why they're so popular. So I'm going to go over a few of these just to make sure you understand them. Okay, so at Green Home Loans, you have the ability to pick comp plans where you pay for your own credit, make more, or we build your credit report fees into your comp plan. Totally up to you. And we'll go over that here in a second. But if you're paying for your own credit, you can go to Rocket and you can pull free credit reports, both single merge and tri-merge. And when you pull the credit, it's actually going to pull the FICO model and the Vantage model, and it's just going to use whatever one works better for your client. So you get free credit reports. You also get free what-if scenarios and credit upgrades that you can even do during the process. They help you do all this stuff, make it super easy. You have free 20-day lock extension. So let's just kind of throw a real-time scenario. Let's say you go under contract on a 45-day close of escrow. Most of the time, you're going to have to do a 45-day lock. You work with Rocket, you do a 30-day lock, you do a 15-day lock extension at the end, you cover your client. Other cool thing with Rocket on their lock, it's a sign date, not the fund date. So if your loan signs early, that's what your lock is till. It's not the day it funds. So really cool advantage, especially let's just say you have a close of escrow that goes long. Maybe you have an inspection issue where you have basically can give your client the same deal versus going back and constantly have to extend that lock and give them worse pricing. Really cool thing that helps your customer service. Rocket's been the number one, number two lender in the country for years, 30 years, whatever it is. They have the lowest PMI in the industry because they've been that for so long. So there's nobody I've seen that has lower PMI in the industry than Rocket. Okay, one of the huge advantages, and this has helped our loan officers save tens of thousands of dollars, and I'm not being facetious. That is really what happens. If you do a loan and the loan is paid off early, let's say you do a conventional loan, it's paid off in 4 months, your clients decide to pay it off, you are not going to get charged your commission back like you are with almost every other lender on the market. Okay, this is huge. We've had loan officers that have hit huge commission hits because they got EPO'd at different lenders. Rocket, you get the protection. You don't have to even worry about it. Okay, dedicated AE support. Our AE is Sam Abelhausen at Rocket. He is amazing. He's there to help you with a ton of stuff, and he's just a very proactive guy. Gets involved with your files, gets involved with underwriting if you need to. With Rocket, you're going to work with the same underwriting pods on all your deals. So if you're sending a lot of business to them, you are going to start to get to know the underwriters, know how they underwrite, and things like that. And I think that's important, especially if you're doing purchase loans. Understand that relationship and understand how everybody works. And then with Rocket, you don't have any like games or points, or you have to watch videos, you have to fly to Detroit. You just do loans. So pretty cool. Just do loans and give you all these tools. One other thing they recently added is they did a 3-year contract with Compass. So if you are working with a Compass buyer's agent, keep in mind, Compass owns a lot of other companies. Compass, Century 21, Russ Lyon, Coldwell Banker. If you work with any buyer's agents on that, they get 40 basis points better pricing on all their deals, which usually equates about around 0.25% lower on rate. So you could use that to pitch those particular realtors on working with you with Rocket. Okay, a couple other things. Want to go in a little bit more depth on our support and how you do loans here. So number one, our LOSs arrive. Okay, we used to use LenderPad for like 2 weeks. I promise you, we did a ton of research on this. Arrive, in my opinion, is the best LOS on the market. We used to use Encompass. I couldn't even imagine going back to Encompass right now, if I'm being 100% honest with you. Arrive is clean, it's web-based, it's super fast. There's support in the bottom right corner. So if you have an issue or maybe your AUS is getting error, they have live support there that can help you. You do one-click DU and LP runs. It has a ton of automated milestones that you can customize to realtors, title companies, transaction coordinators. When you get approval, clear to close, pre-qual, funding, whatever you want to do, you can really customize it. You can create almost like Mortgage Pro, or I forget what the name of it is, but like presentations with different rate pricing with graphs and stuff that look cool. You can create rate alert notifications where if you have a client that closed and is waiting for a certain rate to refi, you can basically put that in the system. It's going to notify you when it's available. So Arrive, in my opinion, is by far the best LOS on the market, and that's what we use at Green Home Loans. Okay, now with our processing, most of our rosters that work with Green Home Loans loan officers right now used to be on our payroll. We pushed them to outside processing so the loan officer can charge the client the outside processing fee versus taking a commission cut on every single deal. Okay, so when you come on to Green Home Loans, here's my suggested process. You give us what your hot points are in working with a processor. Okay, I'll give you an example. Let's just say you want your processor to do Tuesday LSU updates to your realtors, Tuesday updates to your clients, and you want to do a weekly pipeline meeting on Monday at 10 a.m., whatever it is. Okay, you tell us that. We try to find a few different processors that would meet what you are looking for, and then you interview them and find the best one for your business. One of the things about retail, and at least the ones that I've worked with sometimes you're stuck with a processor you don't even like or work with for years. Okay, here you have the control to do that. So if you're working with a processor, maybe it's not working out, you can switch processors. So it really just gives you that control and getting the processor that works the best for your business. So our LOS is Arrive. Our processor is Hancock Processing, is the company that we typically use, and you control the processor you work with that's going to work the best for your business. Okay, now this is really, I would say, one of the things that really makes us stand out as Green Home Loans is we are here to help support your front end of your business, which is the sales part of your business. I'm a sales guy, a marketing guy, a prospecting guy, because to me, the back end of your business doesn't even matter if you don't have business comes in the door. Like you could have the best back end in the world, but if I have no clients, it does not matter. Okay, so what we want to do is we want to give you every tool possible in the toolbox. And all these tools are the ones that we use to scale to 230 million as a purchase team that you have access free at Green Home Loans. So I'm going to go over a few of these. In-house business development and marketing. We already covered this a little bit, but anytime you need marketing pieces, anything that has to do with marketing upfront sales, we're going to be able to help create that for you. Our biz dev team can also go on realtor meetings with you, usually by Zoom. We've been on 500, 1,000 realtor meetings, if not more. And what our focus of our realtor meetings is very simple. Getting to know the realtor that you're wanting to work with, understanding their goals. Are they trying to build a team? Are they an individual agent? How many transactions are they trying to do? Where does their business come from? How do they originate deals? And then we try to find ways that we can help support them so they're just not sending you deals. We're actually a meaningful business partner in their business. And we help them implement, and we have a ton of free tools that they can use. Our in-house business development also will help you schedule classes and events. So let's just say you're a loan officer, and one of the things that you do is you hold a monthly first-time home buying webinar. Okay, you can do that with us. We help you schedule it. We create the marketing. We help you do the signups, all that stuff. Or maybe you want to do a realtor happy hour or a realtor mastermind. We can help you schedule and do all those things without any issue. One of the best things that I think we do is a weekly and monthly newsletters. I'm huge on staying in front of people because a lot of times if you're trying to, prospect a realtor, or maybe you talk to a client that's not ready to buy right now, you have to stay in front of them consistently. So when they're actually ready, or the realtor's loan officer messes up and you get an opportunity, you've been staying in front of them consistently, so you get that opportunity. Okay, so this is a completely optional thing that you can use in your business, and we can help you set it up. But we actually write weekly and monthly newsletters for you. So every Tuesday when I wake up, I spend about 2 hours. I write a newsletter on what's going on with rates, what's going on with new products, what's going on with housing. I send a realtor version and a consumer version out to every loan officer in our company. You can take that, you can copy it completely, or you can customize it to yourself, throw a bomb video in it, whatever you want to do. But what I'm big about is staying in front of people on a consistent basis. So we do that every Tuesday, and then I do a monthly newsletter around the 15th. Monthly newsletter, the reason I do monthly newsletter is because there might not be people that you want to send a weekly newsletter to. So for example, maybe you have past clients and you think, hey, a weekly newsletter is a little much. I'm going to do a monthly newsletter. So we do a monthly newsletter, which is a little bit more created as a monthly type situation, a little bit more broader scope, and you can utilize that if you want as well. Our biz dev team also does monthly realtor classes. So we've talked to a lot of brokers that struggle with calling realtors. Okay. And an easy way to call realtors is to call them and not just always sell them, offer them things of value. So at Green Home Loans, you're always going to have the access to do this because we always have free tools and we have monthly realtor classes. So we're going to throw a class every single month on something that could value that your realtor could take advantage of. Maybe it's CRM management, maybe it's farming a neighborhood, maybe it's open house, something that, working Claude, Instagram, social media, whatever it is. We're going to throw classes on that regularly. You can use these classes to invite your realtors, and then anybody that signs up under you, you're going to get a list of that, and you can use that as a follow-up tool. Hey, it's Reggie Green over at Green Home Loans. It looks like you registered for our class on CRM management. What'd you think of the class? Anything I can help with? We're always trying to create things so you can reach out to realtors with value. Okay, we have a ton of free sales tools. Like usually when you go to a broker company, you have to pay for absolutely everything. And if you are paying for any of this stuff right now, you know that this stuff can get very expensive. Okay, so we have all this stuff built into the platform that you can use absolutely for free. So Loan Sifter is like Optimal Blue on the broker side where you can price every single lender on the market. Redder is a platform where you can look up realtor and mortgage stats. BombBomb is a way to text and email people videos. If you try to text someone a video, it's usually going to be distorted on the other end. BombBomb creates a thumbnail and a link and makes that a lot easier. Zoom, you can certainly get your own Zoom if you want, but Zoom webinar costs like $1,000 a year, or you could use ours. Maybe you want to do, like I said, realtor meetings. Maybe you want to do a monthly webinar for first-time homebuyers. You can just use our Zoom and you don't have to pay for that for yourself. MBS Highway is a great tool to know what's going on with rate pricing on a daily basis. They do a video every single day. We actually record that video on Loom and we snip out their commentary so you can see that, and then you get forwarded any rate alert locks. So you have full access to MBS Highway. You can also log in for all their marketing tools and we can customize those to your brand. Keeping Current Matters, if you don't know what this is a very popular platform for realtors and loan officers, and it just has a ton of content that people can use in newsletters, social media, whatever it may be. They got social media graphics, infographics, articles, videos, seller guides, buyer guides, first-time home buyer guides that your realtors can use or you can use for any content you want to create. Mojo Dialer you can use for free. If you do a lot of prospecting in your business, Mojo Dialer makes that much more effective and just more efficient, and you can reach a lot more people. List reports, if you want your client or your realtor partners to get a plethora of marketing material anytime they have a house go live on MLS, you can use our list reports. Lead pages, we create customized websites for all our loan officers if they want us to. So a lot of our loan officers have websites like a personal website where it's their personal brand. They have a website specifically geared towards realtors going over their value prop and why they may want to work with them. You have websites where you can capture like free mortgage quote information or 5-day HELOC information, just a ton of different ways. And we can create as many websites as you want to help your business. You can use our Dropbox for free, our eFax for free, ChatGPT Plus. If you're local in Scottsdale area, we have a media room in our office where you can tape whatever you'd like. Loom allows you to tape your screen. You can use our Loom free, and Jotform is basically a form that you typically put on websites where you can capture information. You can use our Jotform for free, and we help you code it and put it on websites depending on how you want to do it. I will tell you, I know a lot of our competition out here, including retail. I don't know a company that does more in front end sales and marketing biz dev than we do. You're going to be very supported in this part of your business. You're going to have every single tool possible to try to work with more people. Okay. Now, the loan officers, like our full-time loan officers that are working here, they're winning. We started 3 years ago with like 4 loan officers. Okay. Now, I think we have like 40, 45, and our full-time loan officers, like we've closed 1,500 loans in 3 years. And our loan officers that are actually full-time average a good percentage per month. If you look at the average national brokerage, most of the time their loan officers are averaging less than a half loan per month. We have an active collaboration and culture. So every 2 weeks, we're going to do an LO mastermind. I actually run it, going over origination strategies, how you can get more business. It's collaborative. So people have questions, people bring up things that are working for them, that they're struggling, and we talk about it. If you're on our squad, you're going to have access to our Microsoft Teams. And on any given day, there's 20 or 30 messages in Microsoft Team going over, hey, how would you structure this deal? I have this weird situation. And LOs are constantly sharing with each other and helping each other out as part of our culture. Already mentioned this, but in-house marketing support daily, not only what you request, but things that come out. Like if a new product comes out that's a really good product, we're going to proactively create that marketing for you and send it out to you. Maybe a change happened with Fannie Mae and conventional loan limits went up or whatever it is. We proactively are looking at this stuff and constantly creating it for you as well. One thing I forgot I'm actually sharing the wrong screen. Oh, I did not mean to do that. Okay, moving on. With us, and this makes us very unique, is most of the time when you go to a mortgage broker company, they have one comp plan fit all. And we really try to customize it to your business so we can focus on what works best for you. So with us, you can go 1099 or you can go W-2. You have to go W-2 if you're working in states that require a W-2. Now, if you are W-2, you have access to health benefits and 401k. 1099, you do not. If you're W-2, we encourage you to write off all your business expenses, including phone and internet. Like you can't work as a loan officer without a cell phone, and you can't work without internet at your house, especially if you're remote. Okay, so take all your business expenses, submit them in. Give you an example. Let's just say you made $10,000 one month, but you had $2,000 of business expenses. Your phone, your internet, maybe some credit report fees, maybe you bought some leads, you took a realtor out to dinner, whatever it is. You submit those fees. Okay, we're going to pay you $8,000 on a W-2 regular pay stub, and then you're going to get $2,000 as a reimbursable expense. Basically, what that means is that is not tax. So you get your full $10,000, but only $8,000 is tax. Okay, so 1099 or W-2, depending on how you want to do it. Most broker companies, you have to pay for your credit reports. With us, you can, or you can also have them built into your comp plan. Totally up to you. Some people don't want to have their credit card on file and be charged for credit reports. So we try to put together as many options as we can for you. Keep in mind, if you do decide to pay for your own credit, you can usually limit that bill a lot by working with Rocket Pro, because you can pull it there for free. We have also different comp plans. Maybe you're just a single loan officer, but maybe you're a branch manager or a team leader and you want to throw overrides for the people you're mentoring or things like that. We can really customize this to how you want to do your business. And then all loan officers have a $250 recruiting incentive. And how this works is really simple. Let's say you come over, you really love our platform, and then you tell your friend Sam, hey, Sam, you should come over Green Home Loans. I really love it. It's really helped my business. Sam comes over, Sam does 3 loans a month. You make $750 in passive income every single month. Okay, now, I don't know if you've ever looked at this, but you have these multi-level type things in real estate, and some of these teams or people at EXP and Real are making like $1 million a year just on their downline. So we just wanted to put this into our comp plan so you can build other income outside of just origination just by helping us recruit quality loan officers to the company. Okay, so you can recruit, you don't have to, but it is a way for you to make passive income. Okay, now we try to make the transition as easy as possible if you decide to come over. So what I typically recommend for loan officers that are going to come over to Green Home Loans is to pick a day that you're going to stop originating at your old company. Because the reality is if you keep originating at your old company, you're going to keep putting deals in your pipeline and you're not going to want to leave until those actually close and you get paid. So let's just say you decide you're going to come to Green Home Loans. And today is June 11th. Let's just say on June 15th, you stop originating at your other company. So if deals come in and maybe you're waiting there till July 1st until you get paid, you can send those deals to our transition team. We can run the credit. We can make sure they qualify. We can lock them. We can do everything. And then once you get over, we transfer them back to you. Or if we have to close them under our name, we're happy to do that. And then we just give you a sign-on bonus for whatever the commission would be. And we keep you actively involved and communicate with you during that process. Okay, now once you actually do come over, the first thing we do is we have you fill out an online credit and background check. Usually takes about 24 hours to get back. Then we set up an onboarding day once that's cleared. So an onboarding day is we're going to work on transferring your license. We're going to make sure that you understand how our platform works. Do you have the systems? Do you know where to go to look up stuff? Do you know who to call if you have questions? We're going to create all your initial marketing, websites, things like that. And we can also do a business planning session of origination activities if you'd like us to. And then we give you a post-onboarding checklist of, hey, we've done all this stuff, but here's some things you may want to do, to make sure you're setting yourself up for success. And I'd like to reiterate this a lot. Like, we're here to help you. When you're transitioning companies, it's always learning something new. There always is a transition, but we're here to help you to make this as seamless as possible. When you're pricing deals, things like that, if you have confusion, we're here to help you and make sure you understand it. Okay, so that's how our platform works. So if this resonates with you, if you want to be a loan officer that wants to control your comp and your pricing on every single deal, if you want to be able to make as much as you want to make on a particular deal, if you want all the products on the market, but you also want support around your business, like, we're going to be a great platform for that type of loan officer, that type of team leader, that type of branch manager. So feel free to reach out to me for a confidential conversation. We can really discuss your business, go over everything. We don't sugarcoat everything. We try to make it as clear as possible. So, we can do live pricing scenarios, or we can actually price them and send them to you. Our goal is if you come to Green Home Loans, everything that you're going to get. No sugarcoating, no bait and switch, none of that stuff. So really appreciate your time today. If you have any questions, just reach out to me personally. I'm happy to help you any way I can, understanding our platform. And really appreciate your time today. Again, Reggie Green, 480-206-557. You can email me at reggie@greenhomeloans.com. Hope you have a great day, and thanks so much for your time today.